Well, the UAE markets have been among the most affected by the global credit crisis, with the DFM losing 72.4% during last year and the ADX 47.5%. They're not alone. All markets have been battered by the global credit crisis, and most economists are saying that the UAE will be the first to emerge from the crisis quicker than many other places because of stimulus packages like the $20 billion UAE government bond, which is aimed to send liquidity back into the market and get banks lending again. Well, using the internet now, many investors are not just looking at a localized perspective, they're going global. With us to talk more about this and the work of an institutional brokerage, we have Nicholas Wright from Mubasher Financial Services on the programme with us today. Thanks for coming in, Nick.
Thank you, Greg.
Well, I mean, what do you tell investors these days? Because, you know, the path ahead is so sort of dicey at the moment.
Bearing in mind that our investors are generally institutions, both regionally and internationally, we're obviously, they're caught up in the global credit crisis just like everybody else. However, as you've mentioned, there are a few factors that have started to emerge in this region. One being liquidity has started to come back, and confidence to a certain extent has come back. And we've definitely seen some volumes coming from institutions, mainly regional at this moment in time, but in particular back into Dubai, which is, I think, a very healthy and a positive note to start 2009.
Now, how do institutional investors have their own list of sort of requirements, so to speak?
An institution, first of all, let's look at what he's doing. He's trying to invest a portfolio. Generally, those portfolios are relatively large. So it's crucial for an institution to be able to enter the market anonymously, quietly. He doesn't want noise around his orders, because the worst thing that can happen to an institution is market impact because of the size of his orders. So the first thing an institution needs is a decent amount of liquidity to mix his order in. Second thing he needs is transparency. So important. His positions tend to be long-term. They tend to be based on real fundamentals. And so, real reporting, real numbers, meeting with management and understanding where a company is going is pretty critical as well.
As I mentioned in the introduction, the UAE government is actively getting liquidity back into the market with these bond issues. Will some of that money actually help in your line of business?
The reasons that the institutions came here a couple of years ago, the fundamentals, they still believe are here. Young population, cash surplus, lack of debt, and a growing consumer population. And institutions are waiting on the sidelines for volatility to calm down a bit, and they all are going to come back to this region. That's our opinion.
Now, if the investors have taken the money out for the time being, where are they placing the money now?
You can see a direct correlation back in September last year with money pouring out of emerging markets and Middle East obviously included, and pouring into US Treasuries. There's literally a spike on US Treasuries and a dip from emerging markets. So institutions have gone back to the West, to the safest thing they know, which was a US Treasury. However, now we know you're not getting any kind of return on a US Treasury, which is why at some stage those institutions will want to come back to the equity markets.
In what way does your business with online trading assist business people?
In terms of Mubasher and what we're trying to do here, I think one of the problems have been for investors in this region is that they've been very localized. It's very difficult to trade regionally. It's very difficult to gain access to different markets. And at Mubasher, through technology, we're providing platforms to local banks, funds, and institutions to be able to access the whole market. This means that they can, to a certain extent, diversify their portfolio. When stocks are going down in Dubai, they're going up in Qatar.
What about gold? Because this is big business at the moment, and people are finding a safe haven in gold, aren't they?
There's been a very interesting development here in Dubai, where a company called Dubai Gold Securities has just listed the first ever gold ETF on Nasdaq Dubai. This is Sharia compliant, and it gives investors the ability to actually buy gold without actually having to physically hold gold, which is a real problem. So they can buy these shares in this company, and effectively they're completely linked to the price of gold. So giving them the ability to hedge their portfolio and get the safe haven of gold.
Just finally, what is the next chapter in internet trading?
Well, I'm going to tell you a word. It's called algorithms, and I know it sounds pretty complicated, but it's not. It's basically a computer-generated model, and what it allows an institution to do is to put an order into this computer model, and that computer model will then take in thousands of pieces of data from the exchanges and work his order strategically throughout the day, breaking it up into little pieces and sending it at appropriate times throughout the day, therefore improving his ability to get a better execution price, and again, most importantly, not revealing the whole order to the market. So algorithmic trading, something that I worked on in the West and is now accounting for around about 30 to 40% of all institutional orders. We are pioneering this for the Middle East, and we're very excited about it.
Well, Nicholas Wright from Rubasha Financial Services, it's been great having you on the programme today.
Thank you.
We hope to see you again soon.
Excellent, thank you.
Well, there we are. That's it for this edition of Inside Business. You can contact the programme, as ever, by writing to ib@city7tv.com. But for now, from all of us on the business desk, goodbye, and we'll see you again soon.